Neste corte da entrevista do Michael Saylor no Tucker Carlson Tonight, após explicar o grande problema monetário da história humana, a inflação, Michael Saylor explica o que é Bitcoin, por que foi criado e quem o criou. Menciona alguns dos fundamentos importantes do Bitcoin e o utiliza de diversas analogias que irão fazer você entender melhor a ideia por trás da existência do Bitcoin e o quão revolucionário é esta tecnologia. No decorrer do vídeo, Michael Saylor comenta quando foi que ele conheceu o Bitcoin e como foi sua jornada até se tornar um dos maiores investidores em Bitcoin do mundo, e por que acredita que essa tecnologia pode ser a solução financeira para o mundo, resolvendo o problema milenar da inflação. Michael comenta também do porquê acha que essa tecnologia deva valer pelo menos 250 trilhões de dólares. Ou seja, metade da riqueza do planeta. Saylor faz uma analogia com a digitalização de tudo que tivemos na última década, ocasionada pelas grandes empresas como Facebook e Google, e questiona o quão grande será o impacto no mundo quando houver a digitalização do dinheiro, do ouro e das propriedades. Fica claro, Michael Saylor entendeu a importância da escassez absoluta do Bitcoin, ao compará-lo com o ouro, ações e propriedades, e reitera que o Bitcoin é o único ativo que não é possível aumentar a sua oferta, independente do preço. Michael indaga Tucker com a pergunta de como é possível preservar seu patrimônio ao longo prazo e detalha o que acontece com o seu patrimônio se colocado em diferentes tipos de ativo. Não deixe de assistir o vídeo completo neste canal. Sem mais delongas, fique com o vídeo.
Bitcoin? Well, Bitcoin is the world's first engineered monetary system. And what happened is a set of engineers, nameless engineers, recoiled in horror after the great financial crisis with all the bank bailouts. And they looked and they said, this just isn't fair. It isn't right. We want to create a better money. And they used two technologies. They used the internet, the idea that I could network hundreds of thousands or millions of computers. And they use cryptography, the idea that I could cryptographically sign something so that it could not be tampered with anyone, friend or foe. And using those two technologies, they conceptualized the idea of an immutable ledger, if you will, a bank in cyberspace. What if 100 people got together, 100 people with money got together, and they said, we're going to create a bank in cyberspace. And we want to put our money there, and we don't trust each other. We don't trust the government. We don't trust any corporation. We don't even trust any one computer. So we create a program that keeps track of a ledger, 21 million coins, or shares in the bank, divisible by 100 million, called down to a Satoshi. So 2.1 quadrillion Satoshis. You don't have to know that. All you need to know is there's 21 million coin units. You can't make any more. And they wanted to create it so that they could send their money to each other, to anybody in the network. They could store it for 1,000 years, 10,000 years, 1,000,000 years, forever. And they don't have to trust anybody. So they created this idea of Bitcoin. It's an asset that's protected by cryptography, and it's stored on a ledger. The software administers the ledger. The twist is we distributed the software on thousands and thousands of separate computers. Every Bitcoin node is running a copy of the ledger. So everybody in the world that has their money in the bank has a copy of all of the money in the bank and all the transactions since the beginning of time. So it's the immutable truth. Every 10 minutes, the system batches a set of transactions and then redistributes the money based upon the instructions of the owners. If I want to send you my Bitcoin, I send it and it goes to you, and every single computer on the network updates that. And they all check it cryptographically using modern encryption. Now, how do we defend the network? There's really three nodes of interest to make this compelling. The first node is that Bitcoin node that keeps track of that ledger. It's the most secure database in the world, and it's a database of immutable truth. It's the ledger of money. The second node is a miner. It's SHA-256, or it's an encrypting miner that's generating hash functions to protect the network, and there are millions of them. And they're all competing with each other to build the next block. There's only 1 out of 2 million involved in this network. It's like every miner gives you a lottery ticket, and 1 of the 2 million will get to build the next block and will get paid a lot of money, like $300,000, and you don't know which one. So the miners are a wall of encrypted energy. They're converting electricity into hashes, and then inside that wall of electricity, or wall of energy, is the Bitcoin ledger, which is distributed in a decentralized fashion. Bitcoin is a decentralized piece of software. The brilliance of it is it's a bank in cyberspace that nobody controls, nobody can corrupt. It's a bank run by incorruptible software, offering a global, affordable, simple, secure savings account for everybody on Earth that has neither the means nor the inclination to run their own hedge fund. Right? You have some money, you have life savings, you simply don't want to lose it. You want to put it in a bank. So Bitcoin is that bank in cyberspace. These engineers came up with this idea.
Who are the engineers?
Well, we don't know. We know some of them. They're the cypherpunks. They were into cryptography. The most important of them was Satoshi, who we don't know who it was. Satoshi wrote the white paper, created the first version of Bitcoin, gave it to the rest. And initially, there wasn't any money in the network. They just ran it for a year as a hobby, right? And then over time, there was a famous transaction where somebody bought a pizza, right, for like 10,000 Bitcoin, one pizza. And that was the first transaction. And then the network gradually began to monetize as people bought into the network. And so it's like a fire in cyberspace.
Should we be nervous that we don't know the identity of the founder?
No, I don't think we should be nervous. We should be joyful, because for Bitcoin to work, it needs to be money of the people. It needs to be not controlled by any individual. It needs to be not under the thumb of a founder or a corporation or one strong holder. The most important thing Satoshi did was he created this gift. He gave it to the world. I assume a he. Some people think she. Some people think it's multiple people. But Satoshi gave this gift to the world and disappeared. And Satoshi mined about 1 million coins getting it started, but those coins never moved. Never. They've never been moved. Satoshi's never appeared again. And then the network was in essence a community development all around the world for the next decade, and it's simply grown from $1 million in the bank to 10 million to 100 million to 1 billion to 10 billion to 100 billion. In March of our second quarter of 2020, it was about $180 billion in this network, and that's where I got involved. I was late, but when I got involved, what I saw was an engineered monetary asset, a digital gold, if you will, sitting on an open big tech monetary network. And I said, this is an economic imperative because this solves the problem of inflation for a corporation with lots of cash. I had a lot of cash, and I thought I was going to lose all of it if I didn't invest it in something. And I said, it is also a moral imperative. This is a technology to give property rights to 8 billion people on the planet that don't have property rights. Right? Bitcoin is the highest form of property the human race has ever invented. And I'll explain why in a second. There's 2 billion people that don't have a bank. Right? You can give everybody on the planet a bank and property rights that cannot be corrupted and cannot be inflated and confiscated. You can give it to them for the price of a free download on Android. If you got a $50 phone and you can download some software, you can have your own bank, your own property rights, your own economic freedom and economic empowerment. So it's a moral imperative. And then finally, it's a technical imperative. You're talking about the digital transformation of everything else. The digital transformation of property, of gold, of banks, the digital transformation of war, the digital transformation of government, of security. It's a deep idea, but in essence, if the economy's got $500 trillion worth of property and corporations and stuff in it, well, digital property as capital, as money, is worth that amount. It's worth half of everything, right? And so we never figured out how to digitally transform money or digitally transform capital. We did digitally transform photos and videos and education and books and relationships and communications.
Right.
And you know, the secret to success of Google and Amazon and Apple and Facebook is the digital transformation of entertainment and education and communications. But think about what it means to digitally transform $10 trillion of gold or $100 trillion of property or $100 trillion of currency. So these engineers, they wanted to solve that problem. And of course, there's so many big ideas. One is, it was engineered to be a digital gold with none of gold's defects. 21 million coins, but you can't make any more. The problem with gold is gold miners inflate the gold supply, right, and gold bankers inflate the gold paper supply. They dump gold derivatives on the market. With every other asset on Earth, anything else you can own, houses, gold, silver, commodities, stocks, bonds, when the price goes up, the supply increases. If I increase the price of any stock by a factor of 10, the company issues more stock.
Of course.
If I buy all the bonds, all the municipal bonds, the price of bonds go up, people issue more bonds, right? If I drive up the price of gold by a factor of 10, people print more gold or mine more gold. Bitcoin's the only thing in the world that's inelastic to price. If the price of Bitcoin triples, you can't make any more. If the price goes up by a factor of a million, you can't make any more. Now, so Tucker, let me just give you one more engineering insight. In engineering, there's something called conservation of energy.
Yes. And
the whole point of conservation of energy is energy can either be made or destroyed. There has to be conservation of it. The mathematical metaphor, the mathematical analogy to that is proper math. 10 plus 10 equals 20. 2 plus 2 equals 4. If 10 plus 10 ever starts equaling 18, you got a problem.
Yeah.
If you have a bathtub and there's a leak, if you have a swimming pool with a leak, if I have an electric system with a short circuit, if I have a leak in my engineering system, nothing works. Nothing in the world of ocean engineering, aeronautical engineering, electrical engineering, nothing works lest you respect conservation of energy. The problem with inflation is inflation does not respect conservation of energy. I've got a leak in the system. I've designed a currency which is not conservative. So properly understood, if you said, I want a conservative money supply, a conservative money supply would be there's $10 billion in the economy and nobody prints anymore.
Right.
And that's the Austrian economic sound money principle. Bitcoin is a conservative monetary system. It's the first system that respects the laws of thermodynamics and the laws of physics and the laws of math, which means it is true and pure, right? It has integrity. If you have integrity, if you have something which is true and pure and you have durability, then you can build a family around it, a life around it, a company around it, or civilization around it. Steel is concentrated energy in metallic form. You ever walk in a steel plant and you look at the energy going into steel refining? Yeah. It's concentrated energy. The history of the human race is the civilization that channels energy most effectively always wins. Steel trumps iron. Iron trumps bronze. Bronze trumps rocks. Bows and arrows trump the guy with the spear. The guy with the spear beats the guy with the knife. It's always a matter. If you have air power, you beat land power. Sea power beats the army, and nuclear power trumps everybody. And so, if I have steel, I have concentrated metallic energy. I can create a skyscraper punched up 100 stories in New York. How long will it last? 100 years. How long will a steel ship last? Longer than you will last, as long as it doesn't corrode. Wooden ships? Not so much. Wooden ships rot, right? You want to build a building and punch it up against gravity and hold it 100 years, you need concentrated energy. If you want to build a trust fund that'll last 100 years, how do you save $100,000 for 100 years and give it to your great-grandkids? You put it in the US dollar, you use 99% of your economic energy. If you're maybe 99.5%. You put it in gold, gold supply doubles every 30 years. The gold bankers keep inflating the gold. Maybe you lose 90% of your economic energy. But that would be a lucky happenstance because just about every country on earth seized the gold from their citizens in the last 100 years. Everybody, even the US, they take your gold.
Yeah.
So you want to save money for 100 years. You can't do it with the currency. You can't do it with gold. Which company is going to be around 100 years? You want to put $100,000 into real estate in Florida? Can you buy $100,000? Let's say you could. 2% tax, 2% maintenance, 4% maintenance fee, 4% of $100,000, $4,000 a year. Half-life, like your money's not going to last 100 years. How do I preserve my property, which is economic energy, which is capital, which is money? How do I preserve that? I need something harder. Harder, right? More durable. I need a steel. I need an economic steel. Steel is concentrated metallic energy. Bitcoin is concentrated digital energy. It's energy in digital form. How do you send $1 million of electricity from New York to Tokyo? You can't. You can send electricity 500 miles over a power line, you'll lose 6%. Send it 10 times, you'll lose 60%. It doesn't move. Convert that energy, that electricity, into digital energy, a la Bitcoin. You upgrade it. If you were to convert a megawatt of power via Bitcoin miner into Bitcoin, you'd have about $5 million worth of Bitcoin. You can hold it forever. You can send it to Tokyo for a nickel. Okay? You can put it in a trust fund, right? Bitcoin's going up 170% a year for a decade. The S&P 500 index is going up 14% a year on average for a decade. Gold is flat. It's not going anywhere. It's getting demonetized. It's a dead rock in a basement. It's not fast enough. You can't put gold on an iPhone. Gold's getting depleted, inflated, and manipulated away by the bankers and the miners. So Bitcoin is simply pure economic energy. These engineers, Satoshi and all of Satoshi's compatriots, what they did is created an engineered monetary asset on an open, permissionless network that anybody could participate in. Any country, any company, any individual. You don't need a bank. You don't need to ask permission, right? It is the ultimate egalitarian system. If you want to give property rights to everybody in Africa and South America, even in the face of a hostile regime, you can do it with a $50 Android phone and a simple download. What's your next best idea? Go to Zimbabwe, okay? You have $100. How are you going to store the $100? One more metaphor. If you can't store property, if you have no property rights, that means you can't store economic energy. If I took away every dime from your family and you got up tomorrow, you'd be worried. You lose your job, you're going to go hungry, right? You need money. You've got a bank. You're in the Western world. You have Western privilege. Lucky you. You have stocks. If you have stocks, they go up 34% a year. Maybe you're keeping ahead of the inflation rate. If I take away your stocks, and you have to store in currency, well, now you can't stay ahead. If I take away your bank, you can't even have the currency. What if the dollar is not the worst currency? The dollar is the best currency. If I put you in Zimbabwe, it's much worse. If you're in Argentina, you lost 40 to 60% of your purchasing power this year. If you're in Venezuela, much worse. So what does it mean to not have property rights and to not have a strong currency? It's like being a type 1 diabetic. If you live in a country with a collapsed currency, you're an economic diabetic. In the 2 weeks after you lose your job, you can't feed your family, you can't feed yourself, you can't plan for the future. So now we're back to what's the basis of civilization and what's the basis of virtue in a society. So you got to be able to plan for the future. You got to look out 10 years and believe that you can provide for your family. What's the point of investing in something if you think that everything's going to hell in 5 years or 10 years? How did I get into Bitcoin? I had a company with $500 million in cash earning 0% interest. And I heard the bankers say, we're not even thinking about raising interest rates. I saw a K-shaped recovery where everybody on Wall Street got 30% richer doing nothing in a year, where everybody on Main Street had to work 30% harder to stay still. That's what I saw last year. If you're on Wall Street with $1 billion, you went into the year with $1.3 billion. If you're on Main Street working for a living, selling something by the sweat of your brow, you had to raise your prices 30%, working harder in order to generate 30% more money to buy the same thing you could have bought before the crisis. What I saw was 2,000 people in my company working hard, doing 100,000 things right every year could make $50 million. And the money in the bank was going to lose $100 million a year in value doing nothing. And we were running as hard as we could and going backwards, right? That's the problem. It's like you're in a boat, you're rowing across, you're in a rowboat, you're going across the water, and the wind starts blowing in your face, and now you're getting blown backwards. You're going to row harder? The wind is the monetary inflation rate. Right? When at 10% wind, it's hard. When it got to 20% wind, who can grow their cash flows 25% a year? Who can do it? A monopoly, a digital tech monopoly might, but I mean, nobody else can. Dentist can't, doctor can't, normal people can't, normal company can't. So the wind starts blowing double and triple in your face. You're rowing, you're not going to get across the Atlantic. You're going to die on that rowboat. So what do? Turn the boat around, put up a sail with the wind.
Yeah.
That's what I did. So let me give you an economic short story here. The company's worth $1 billion. This is MicroStrategy. We've got a $500 million software company that generates $50, $75 million a year in cash flow. We have $500 million in the bank. We're valued at 1 times revenue plus the cash. And the cash is going to lose 20, 30% of its value. So I'm looking at losing $100 million a year, $150 million.
By doing nothing, just sitting there.
Just sitting there doing nothing. Well, so what do? I said, well, I'm going to buy something. So I went and I bought Bitcoin. I bought $250 million worth of it. And then I offered to buy back $250 million of my stock because if my shareholders didn't like the idea, I figured I'd buy them out at a premium. After the buyback, I had another $175 million left. I bought more Bitcoin. We had $425 million of Bitcoin. When I started this journey, Tucker, the stock was $120 a share. We bought out our limited partners. We bought out our shareholders at $140 a share that didn't like the idea. The stock traded up. Bitcoin traded up. We doubled our initial investment. The stock kept going up. And then I looked and I said, I'm just going to borrow money. I went and I borrowed $650 million at 75 basis points in the capital market. I issued a convertible bond. I bought the Bitcoin, 19,000. The stock kept trading up. Bitcoin kept trading up. We'd made billions at that point. I went back to the market. I borrowed $1 billion at 0% interest. Because why wouldn't you? And if the money supply is expanding at 25% a year and you can borrow money at 0% interest, all you got to do is buy something which is scarce, right? So I bought $1 billion of Bitcoin. I issued $1 billion of bond. To make a long story short, we ended up borrowing $2.2 billion at 1.5% interest. We bought the Bitcoin. Bitcoin has hit an all-time high. We now have about $7.5 billion worth of Bitcoin. We've made about a $4 billion investment profit on it. The stock went from 120 to 850. We generated about $8 billion in shareholder value in 12 months.
Have you talked to your limited partners who got out early?
It's complicated when you're a publicly traded company.
I can't even imagine.
But, so now what are we? We're a $500 million software company generating maybe $80 to $100 million a year in cash flow, growing 0 to 10% a year.
Right.
With a $7.5 to $8 billion endowment that's growing 170% a year. But, it's like, why not? Like, so now, if you're a university, you want an endowment, and now we can do what we want.
Well, so somebody gets it. First of all, that was, how long have we gone? How long is this? You spoke uninterrupted for about 50 minutes.
You can cut me
that
any
was,
way
no,
you want.
that was
Sorry.
amazing. That was like one of the most unbelievable things I've ever heard.